Happy New Year, everybody. We thought we'd come on and give our first episode of Coffee with Homelove of 2023. We wanted to bring it back and bring you some really good information. And Steph actually has something she wants to share for this.
Well, yes, we were talking about this earlier and found this article. It was talking about how U.S. is suffering. The headline was U.S. is suffering from the second biggest home price correction since the World War II, since post-World War II era. And we were just laughing and talking a little bit about how sensationalized the media can be and how much doom and gloom they can make the market out to seem. So
well, and the problem is that people read the title of the article and they go, oh.
Yeah.
And they don't actually read what it says. Because if you read what it says, it's actually a reflection of what we got going on.
Well, they use negative words like suffering.
Mm-hmm.
Yes, it is actually a price correction, which is a good thing because we were going crazy all of 21 and 22, and it needed to correct itself, and that's not necessarily us suffering.
No, and so just to kind of back up why it is not suffering, what they've actually said in the article is that there's overall in the US, there's a 40% increase in value between 2020 and 2022. And that they expect this to be 10 to 15% downward swing.
Right.
So it's still positive.
So we're still very much in the green, right? We are not in the red.
And if you're wondering how that reflects in our area, because I know that you're looking at the MLS probably and seeing that there are a lot of price reductions. There are. But to give you a really good example, I had a listing recently that whenever we comped it out based on, the 6 months prior, it was valued at about $510,000. And, whenever you're working with sellers, what you really want to do is try to get the most that you can. And so we gave it a period of time to see whether it would sell for that amount, knowing that it was kind of in a decline. But you don't want to leave it there too long because you might miss the downswing and actually get less for the property. So
Right. Why don't you explain that a little bit? Just in the fact that if you leave it too high
for too long, if you can consider that as it's going down, right? There's some properties that are closing, not a lot because we have low inventory, but there are some properties that are going to be closing after having price reductions because those are sellers that need to move. They've moved on, they need to move. So they're going to drop their price to get a contract. And the longer that you leave it on the market overpriced, the less it's going to be worth by the time you actually sell it. Right. So because it's in a downward swing. So what you really have to do is continuously monitor what is closing. And so we reached a point where there was a listing that closed in the 460s, and I contacted them and said, okay, listen, this is what we're seeing right now. I know it's not what you want to hear because we were looking at the 510. But if you look at historically what the value of the property was, it tells a completely different tale. So in 2019, that same property was worth about $370. In 2020, $375. That's just a little normal uptick, right? 2021, it went up to $441,000. And then within the first half of 2022, it skyrocketed up to $510,000.
And those jumps are not sustainable if they continue.
And they're not really real. I mean, they are real because it's happening, and then that means that's what market value is. But you have people that are going into multiple offer situations and they're offering over and doing an appraisal waiver, and it goes up much higher because then there's not appraisals keeping that in check at that point. It's definitely supply and demand. Now, the problem is that whenever things changed and it starts to float back down, it's like, it doesn't feel good ever to be in a decline. But we ended up selling the property for $467,000, which was about, $26,000 more than what it was worth the year before.
In 2021, in the middle of the upswing.
Correct.
It still sold for higher.
Yes.
So, yeah.
It's not all, even though there are corrections, it's not all bad news. Now, where's this going to go? That's the thing. It can get to a place where it does start going down lower, and it's really going to kind of depend on the economy and interest rates. And so people, there's an uncertainty around that. There's an uncertainty around interest rates. There's an uncertainty around the economy. And so people are holding off. So, we're feeling that. And it can swing in either direction. We can have an increase in the unemployment rate, which is not a good indicator of the economy, doing well. And so that can cause this to continue on. We could also, have a better look economically, and it can go up. And the thing about that is that if things actually start to improve, we're going to very quickly go back to how things were there for a while, because we still have a housing shortage.
Right, yes. And that plays a significant role in the depreciation or appreciation of the housing market, because there's still not enough homes for the amount of buyers that are out there willing to buy, right?
Right.
And so that will also help it to stabilize and not be so much of a crash or doom and gloom like what people were considering if there was a huge recession. So,
For now, that's kind of where things stand. But I think it's important that people understand that clickbait that they see is not always reflective of the truth. And the truth, while it was in the article, was definitely not clear by scrolling.
Right. Make sure you listen. Yes. And make sure you do your own research or reach out to us, and we're happy to help clear some stuff up for you.
Absolutely. So I hope you guys are enjoying the new year, and I hope you have a really great and prosperous new year, and that, it's filled with all sorts of positivity.
Absolutely. Let's go 2023.
Yes, let's go.